Daddy born poor, mama was too. Walking through the snow, plastic bags on their shoes. Papa selling houses, sleeping in a car. 4 babies in the backseat, underneath the stars. Well, hey, hey, just work a little harder. Hey, hey, punching that clock with work and prayer and a little bit of luck. Make so much money, need a 10-ton truck. Ha, 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 ha.
Good morning, everyone. Paul McMann here with Forex Smart Trade. It is Thursday, December 21st, 2023. It is the first day of winter, the day that the night is longest in the year, and a few days before we celebrate the birth of Jesus. So glad you could join me here at Forex Smart Trade. Our goal is to have you or teach you to become a successful currency trader. We've been doing this for 15 years. We've got some simple but highly accurate proprietary trading indicators. And our method is through personalized one-on-one coaching, which we think is the most efficient and effective way to get you up to speed and get you trading successfully. And we're so confident we can do that once we've trained you, we'll let you trade with our money and split what you make. So that guarantee, I think, differentiates us from many out there. So with that, we need to start by listening to this guy, and then we will jump into it. Let's get going here.
Due to federal and state regulations, we are providing the following disclosure. Please stay tuned, as this will take less than a minute. Foreign exchange, futures, and cryptocurrency trading are highly risky, and you can lose all the money you invest should you decide to engage in live trading. We are not responsible for your investment, trading, or tax decisions. We are not licensed financial advisors, traders, accountants, stockbrokers, or attorneys. We are not licensed commodities brokers and do not engage in or facilitate commodities transactions. We are not an introducing broker, and we make no recommendation as to where you should invest or what broker you should trade with. As you apply what you learn, we recommend you seek advice from licensed professionals. Any trade results that we show should not be considered typical of our students. We do not and cannot track the results or performance of our students' private trading accounts. We do not know what a typical or average student earns or loses trading. This is not a get-rich-quick program, guaranteed system, or business opportunity. We sell training and trading tools. We make no promises our training or tools will generate future income for students, and you may not make your investment back, including your investment in this training. Any redistribution or recording of this material is strictly prohibited without advance written permission.
One of the great things about our program is that we are constantly training. Being good at anything requires that you constantly go back and work on the basics, and that's one of the things we do. In addition to, I do 3 live trades a week, plus send out the overnight trade setup with a little video of how I figured it out. But once you become a member, every morning at 10 a.m. we do a live trade. Every evening at 10 p.m. we do a live trade. And we've got 2 training sessions during the week, one on Wednesday evening and one on Saturday morning when the market's closed. Saturday morning one, back to the basics. We are continually reviewing the various trade strategies and then taking questions so that you always have a resource that can help clarify things for you. I like to work off of a little checklist, and that checklist, where is that checklist? Here, help checklists help you be more organized, and some research has shown that if you're a surgeon, working off of a checklist significantly enhances the surgical results. Every day it's good to restart your green chart, clears out the memory, picks up any updates that were done. A review of yesterday's trade, or at the end of every day, review the trade. You're never going to trade at 100%. If you get to 80%, you're doing pretty good. We do have some traders up at 90, but generally if we can get you up over 70%, you're going to be able to make money, and that's our goal. And one of the ways you get that accuracy rate is by going back and studying the things that didn't go well. Now, if you have taken last night's trade, one of them closed profitably. One of them has gone the wrong direction. So I want to show you. I actually, right before we started, I hedged this trade. This is on the demo account where I took the trade. I also hedged it in my live account. Here, when I got up this morning, these were all going up. But the hour, the 2, the 3, the 8, the 12, and the 1 were not. So I dropped in a hedge based on these 3, and a few minutes before we came online, this went from going down to going flat on the day chart. So I was going to drop in a second hedge. So I dropped in a hedge, took off the stop loss, and then I was going to drop in a second trade, and I'm going to do that right now to kind of stop the bleeding here. So I'm going to do a market buy. And at this point, we're going to go to, we're going to use a lot size of 2.68. So I'm doubling the lot size to try to eliminate the loss that we got running here. Market buy. And now I'm just going to, there's a way you can figure it out. And off the top of my head, I would need to think about it. And I don't want to waste our time thinking about it. But I'm just going to watch this until right now I got 310 in the bank. I got 147 when I hedged the first time. When I hedged this, I took the stop loss off because basically I was going to zero. But I wasn't watching it while I was getting ready to start this. I might have pushed up the stop loss or pushed out the take profit, but since it's already closed while we were waiting, as we've got up all across the board, I'm going to try to take advantage of it. Now I know this isn't like normally I wouldn't take this as a trade because we're overbought and I don't know how much more there's up in the movement. But as we've got an open sell trade, I'm going to take it and I'm going to let it get a little bit profitable. I'm going to let it get a little bit profitable, maybe a little bit more than this. Well, actually, let's do it right here as you're watching me. I'm going to move the stop loss up on this up to my entry point. Modify. I got in at 109.732. So I'm going to make my stop loss 1.09. 735. I'm going to add 3 points to that, and actually, it's come back to even. Let's see here. All right, it's in the move. I'm going to move the stop loss up because if this pulls back, it'll take it out as it's getting back closer to this sell. But I'm going to watch this, and when this number gets to be equivalent to the 147 that I made off the initial hedge, I'm just going to close everything out and go to break even. So I'm looking for this to go to 147, and then I'm going to close everything out. Now I could close it now and. I've made 147 off the initial portion of the hedge. Let's see, 147. So we'd be 150 out of the money. So what's happening now is because I've doubled this up, the lot size over what I originally took, As this goes up, this is going up twice as fast as this is losing money. So the buy is earning money twice as fast as the sell is losing money. Now, the reason I hedged, again, is I've got a clear signal that it's changed. So I'm not going to wait for it to stop, to hit the stop loss. I'm going to take action to mitigate the loss. So this is what I do during the day. So sometimes when you'll see I have trades that are near zero, it's because the trade's gone profitable. I've already made my money for the day. Now I could have just cashed out and just I could close all of this out and I would still be ahead for my day. But given the strength of the signal, I'm gonna let it go. Given the strength of this, I'm gonna let it go. We've got very steep, and as I said, I was watching this. This went from going down when I woke up to going flat to now going up. So since we've got, and then I can confirm that by looking at the echo. I've got green all across the chart. Now, if you're in the trial, you don't know what the echo is, but this is telling me that there's, it is a good time to take a buy. When I've got green all across here, that is a good buy. And let's just take a look at one other thing. Here's a support and resistance. So we're in the middle of a channel, so that is good. So we're going to go on with our analysis, but I'm going to keep this on the side and keep a look at it. So when this gets to around 150, this loss, I'm just going to close everything out. And I made my money last night on the pound yen. So with that, let's jump in. Oh, let's keep going, I guess. Where is what we thought? So review of yesterday's trade. I want to be able to figure out what I did wrong. So what happened last night, we had a signal on the overnight trade that I thought was a good sell signal. It stayed about 10, 15 pips out of the money. This morning when I got up, I saw, and usually around 12 pips is where I'll hedge. I didn't put a hedge on it last night. Sometimes I do, but last night I didn't. But when I got up, we were like 15 pips out of the money, so I did that. So this is a habit that will help you be successful. We are technical traders. We are trading based on the price action, and our indicators are very good at figuring out the price action. News impacts currency prices, so we want to know what those news items are so that we can kind of trade around them. And we get those news items by going to forexfactory.com. Forexfactory.com breaks news items into three categories: yellow, which is low impact, we don't worry about; orange, which is medium impact, some people pay attention to this; and red, which is high impact. Those you should pay attention to. These guys can move the market. And on these red items, and this morning at 8:30, there's information on unemployment claims and GDP. We want to trade around. So my usual rule of thumb is within 2 hours. 2 hours before this item, I don't want to be trading it because I don't want to be holding it when the news item impacts it. And you'll start to see impact from the news item before the actual item is announced because the information gets leaked. So we're not going to trade the USD this morning. The rest of the day is clear. So that's what we need to worry about. So let's jump back in. Now, the analysis, we've got a dozen different trade signals. The analysis I use primarily is something called the 10-point trade signal. When we train people, there are many different personalities and many different things that people like. So what we try to do is tailor a trade plan based on your availability to trade and your risk preferences. So this is the one I like. We will find one that suits your personality. My goal is to get 2 or 3 winning trades a day, to get about 30 pips. And if I make 30 pips a day, I am doing terrific. And usually I quit once I've made my 2 or 3 trades. But I do have the charts up on my side screen. So I'm usually done, early in the morning. I start with that overnight trade. If both of those hit, that's about 22 pips. And then I just need one more trade to get to my 30. I do have the indicators up. And if I see a change, something going on, I will take a look at the chart and then take a trade. On this trade, I like to do it on a 1-hour chart. You can do it on any time frame, 30 minutes and up. I like to be about halfway into the chart to take the trade, which is 30 minutes. On a 1-hour chart, a trade's going to be worth anywhere between 5 and 35 pips. And the reason that is because if you notice, these support and resistance lines tend to be about 40 pips apart. Some of them are a little more, some of them are a little less. But when I am trading, I'm going to trade between these 2 lines. That's going to determine how much I'm going to take. And I am also going to consider what the trend is. So here we've got an uptrend. Here we've got a downtrend. Here it looks like we've got a bit of a breakout. So that's going to determine how much I take. And as I said, it will be somewhere between 5 and 35 because the space between those lines is about 40 pips. And as I said, my sweet spot's 11 pips, and I'm looking to get in and get out within an hour to 3 hours. And the strategy is basically to get all the lines from the 3 different sections of the indicators to line up. When I've got that, I've got a high probability trade. So let's take a look and see what we've got this morning. The chart I am going to trade off of is the Light 6 Major. It is one of the standard charts. It is a composite chart. It's showing us 6 different currency pairs. All on this first one's all the U.S. dollar. Even though we are trading, not going to trade the U.S. dollar. Let's see if we see any signals. Just as part of this is part of teaching you. I want to help you be able to identify. I start with the middle section of the chart, which is a section we call the majors and the minors. The red and green line is the major indicator. The black and gray line is the minor indicator. I pay more attention to what the major indicator is doing than the minor indicator, but I want all of the lines to go in the same direction. Horizontal blue line is the overbought line. Horizontal red line is the oversold line. When the major and minor lines are above the overbought line, I want them pointing down. When they are below the oversold line, I want them pointing up. So that's what I'm looking for. So for example, 2 hours ago or 3 hours ago, oversold, all the lines going up. All the lines going up here 2 hours ago. I want to catch this run through the channel. And this run through the channel is worth 37 pips in 2 hours. So if I can carve 11 pips out of this, I am doing well. And it's still going up, but can I get 11 pips if I take a buy and we're overbought? Yes. And we just did that. We just took a buy when it was overbought. But that was a different situation because I'm trying to fix a bad trade. When I'm looking for a new trade, I generally am not going to take a buy when we're overbought like this. And then I also supported it with what was going on with the 2, the 4, the 8, the 12, and the day chart. Everybody was going up. So here we're basically overbought and going up. So not what I'm looking for. Euro USD overbought going up. Pound USD overbought going up. US dollar, Canadian dollar just reaching the oversold line going down. Dollar Swiss franc oversold going down. And dollar yen oversold, majors going down, minors starting to turn. So nothing here. I've cloned this chart, and I've got non-USD pairs. So let's see what we've got. Euro pound. We've got disagreement between the majors and the minors. I want everybody going in the same direction. Australian dollar, yen oversold. Minors are starting to turn. Majors are going down. Euro Canadian dollar overbought going up. I'm going kind of fast here because I want to see if we can find something we can trade on. But I don't need to look at anything else if this isn't in line. So oversold going down. Pound yen, it's in the middle of the channel starting to turn. Minors are going up. Majors have started to go up. Now, I don't like this to trade on because one, I like the majors to get all the way oversold or at least touch the oversold line. Here it turned in the middle. If it does turn in the middle on a pair that I actively trade, which is either the pound yen or the euro dollar, I will consider it if the slope of the green line is very steep on the turn. Right now we are just a little bit less than 45 degrees. I want this to be far steeper than 45 degrees. But again, I don't like it because we didn't get all the way down, and I don't like the slope here. So everybody's going up. Green lines crossed over the red. The black lines crossed over the gray. So those are the three things I'm looking for. But as I said, I don't like the slope of the green line enough. So I'm not going to continue with the analysis here. Oops, and as we're talking, it turned. Overbought, euro, Australian dollar, overbought, everybody's going up. Again, I've cloned it again. Pound yen, oversold, going down. Miners have started to turn. Euro, New Zealand dollar. Everybody's going up. We touched oversold, and I've got the double cross. Green's on top, gray's on top. I like the steepness of the green line is okay. That's a plus, but we've got a little kink in the green line where it's going from more steep to less steep. I don't like when it goes from more steep to less steep. I want it to go from less steep to more steep. The other thing I don't like is generally once it gets beyond the halfway mark, I don't like the trade because I don't know how much more is here. I want to catch it down here and be able to ride it through the channel. So I do have 3 points here, but as I said, I'm going to pass because we're past the halfway mark. Pound New Zealand dollar. Oversold. Everybody's going up. Double cross. Here the green line is at 45 degrees, but again, we get the kink where we're going from more steep to less steep. So this tells me that the move is kind of running out of gas. And because with my trades, I want to get in and get out. When we're running out of gas, this could run all the way up through the channel, but it might take longer than I want. So because it's got the kink and it's I don't want to wait. I want trades. I only need a couple trades a day to be able to make money. So if it's not exactly what I want, I'm going to pass. And that's one of the things that we're going to try to communicate to you, is to have the discipline to wait for your setup. And it's much easier to make money if you're not starting by having lost money. So like today, there's a little bit more work because last night's trade is currently negative. I don't want to get in a position where I'm taking a negative trade if I can avoid it. Excuse me. New Zealand dollar, yen. Everybody's going down, double cross. We got 3 points here, but based on what I just said, you should be able to tell me, hey, Paul, it's got a little kink in it. The steepness is greater than 45, but we're more than halfway, and we're going from more steep to less steep. So we're going to pass. Oversold and overbought. Everybody's going up, and we have on the major indicator what I call a duck bill. Here's his bill, and here's the duck's head. And I just read a news story somewhere in where the heck was it? Somewhere like in Argentina. Instead of using guard dogs, they use geese on the perimeter because they're cheaper, and when somebody comes near the perimeter, they start making noise, and that's what the guards need to figure out. So they use geese instead of dogs. So that's thinking outside the box. I thought that was kind of clever. Let's see. So anyways, when you see this usually tells you there's more up in the movement. So if you have an open trade, like we do on the, it's not the New Zealand dollar USD, but this tells me that there's a little bit more up. So I'm going to keep the trade open. Euro Swiss franc, middle of the channel. Everybody's going up, but the majors are really kind of going sideways. That green line is way less than 45 degrees. So we are going to pass on it. Let's go through this next one. Australian dollar, Canadian dollar overbought, going up. Swiss franc, yen turned in the middle of the channel. Euro yen turned in the middle of the channel. I'm not interested. Again, we don't have enough steepness on either of these lines. Pound Australian dollar, majors are sideways in the middle of the channel. New Zealand Swiss franc, everybody's going down. So here's a case where we're going from more steep or less steep to more steep. So I like that, but we're way more than halfway. So I'm going to pass. So this, I like the kink in the line. Everybody's going down, but I don't know. The green line is touching the oversold line. And here, Canadian dollar, Swiss franc, oversold going up. Now, we do have normally, since I spent some time, we don't have enough time to go through. Actually, Canadian dollar. On this signal, Canadian dollar, Swiss franc, 0 here. And the red line is significantly overextended. We can take a 5-pip buy there. Let's do that. This is an entirely different trade signal. So Canadian dollar, Swiss franc. So I'm going to go to File, New Chart. I'm going to try to find Canadian dollar, Swiss franc, which is going to be in this third group, Canadian dollar, Swiss franc. My lot size is going to be, we're going to take a buy. We've got 13.7, so I'm going to go to new order. My lot size is going to be 1.37, market buy. And I'm going to go in and take 5 pips off of this. I know I'm going kind of fast. 5 pips is 50 points. And we're going to use a 4-to-1 given the ratio of how accurate this trade is. So 20 pip stop loss. So we took a buy on the Canadian dollar Swiss franc. Buy on the Canadian dollar Swiss franc for 0.64455, 0.64455. And I'm writing this down because I'm going to take it in my other account. A stop loss of 0.64200. So we took a buy on the Canadian dollar Swiss franc. This is using a thick orange line signal. Now let's just go back real quick while we're waiting for this. And when you take this trade, some people, where is it? Will look to see they'll want to see this number change by 1, and it did. It went from 0.00 to 1.08. So what happens is when the thick orange line is a scaled number, so when it's at 0, it thinks there's no more down in the move. If there's no more down in the move, that's a good time to buy. And we confirm that there's no more down in the move by looking at the position of the red line. And if the red line is past the horizontal red line, the red line of the major indicator is past it, which it was, that's the second condition. So condition 1 is this is 0. Condition 2, this is past. And when that happens, when the hour changes, there's usually going to be a little snap, and that snap is worth 5 pips. So I expect this trade to close within an hour. Now, but let's go back and the one thing I didn't check, this was okay, is our Euro USD. So I am watching for this to get to about 150 loss. When this gets to about 150 loss, I'm just going to close it out. Now, what we did is we took the buy. It became profitable, and we pulled our stop loss up to the entry point. So if it does pull back, it'll take us out. And if this starts coming back down, maybe there's a chance that this gets taken out. What we did is on this trade is we doubled the lot size. So we did a hedge and we doubled the lot size because we had a very clear signal that the market's going in the other direction. So as this moves positive, it's going to be moving positive at twice the rate this is. And because it's doing that, that's going to allow us to recover. As I said before you all came on, I noticed the signal had changed. So I did put in a hedge. But as we came on, I would have left this, pushed open, made the take profit more, and left it. So I had 2 trades open, but it ended up closing. So rather than having 2 trades, rather than having this be the 1.34, I just doubled it up to get us there. So, all right, that is it. There'll be no overnight trade tonight, the day before a holiday. Most traders aren't going to be around. So the volume is going to be low. And when the trading volume is low, the indicators tend not to work as well. So no overnight trade tonight. There'll be no live trade on Monday because it is Christmas. So we will reconvene on Tuesday. Morning at 6:30. Have a terrific and blessed Christmas. And one more thing. If this ends up pulling back and closing out, I would put a pending trade in to catch it if it keeps going the other way, to keep this protected. So, right now, the difference between this and this is about $300. So we've got that loss locked in at $300. So that's the only other piece of advice I'd get. But I would keep an eye on this. Now that we get this third trade, and you're going to have to do a little math in your head, but when these two get to be about 150 minus 150, just close it. Oh, when these two get to zero, close it out. When these two get to zero, close this out. All right, gang. Thanks so much. We will see you next Tuesday. Have a good Christmas. Bye-bye.